As you know, you are currently a virtual investor on the Finlytics Financial Markets Experience program. Here, you are using virtual money to trade and invest on real-time prices. Now, where are these real-time prices coming from? Yes, these are prices that are coming from the Bombay Stock Exchange. In this module, we are going to study more about the stock exchange. Here, we'll be covering topics like what is a stock exchange, various stock exchanges in India, and how do stock exchanges work in determining market sentiment. Lastly, we will also be covering a special section on the history of stock exchanges in India. Hope you have a good time learning the module. Coming to our first topic, what is a stock exchange? Stock exchanges are basically a facility that allow the buying and selling of stocks and other securities. All securities, including stocks, are traded on a specified price on the stock exchange. In many cases, you might have observed that price movements are highly dynamic in the stock exchange. Even as a virtual investor, you might have observed that the value of your portfolio keeps on changing every minute between 9:15 and 3:30 p.m. as the prices keep on moving in the stock exchange. These prices and subsequent price movements are determined by demand and supply forces of that stock in that stock exchange. In India, there are three primary stock exchanges. The first one is the Bombay Stock Exchange with Sensex as its benchmark index. The second one is the National Stock Exchange of India with Nifty 50 as its benchmark index. And the third one is the Metropolitan Stock Exchange of India with SX 40 as its benchmark index. Apart from facilitating the buying and selling of stocks and determining the prices of these stocks using demand and supply mechanisms, stock exchanges are also useful in helping you read market sentiment. Market sentiment is often measured and read on a daily basis using indices. Indices are simply a basket of stocks that represent select companies or segments in the market. On a daily basis, individuals like you can track the sentiment in the market by tracking the changes in prices of these indices. Often you might have heard statements like market is bearish or that market is bullish. This is simply market experts referring to the price movements of the benchmark index of the Bombay Stock Exchange, Sensex. Sensex is the primary index of the Bombay Stock Exchange that represents a basket of 30 stocks. These are top 30 companies spread across various sectors of the Indian economy. When you hear a statement like the market is bullish, it means that the value of the Sensex index is going up. When you hear a statement like the market is bearish, it means that the value of this index is going down. Now, is Sensex the only index in the Bombay Stock Exchange? The simple answer to this question is no. Let's recall that Sensex is an index that represents the top 30 companies in the Indian economy spread across various sectors. Apart from Sensex, there are multiple indices that are present in the Bombay Stock Exchange, which are based on sectors, segments, as well as other considerations. Some sectoral indices are the BSE Auto Index, the BSE Oil and Gas Index, and the BSE Tech Index. As the names represent, these indices include a basket of stocks that are present in that particular sector. There are also segmental indices. Some examples of segmental indices include BSE Large Cap, BSE Mid Cap, and BSE Small Cap. Similar to sectors, these indices represent a basket of stocks that belonged to that particular segment. Apart from sectoral as well as segmental indices, there are also indices that are based on other considerations. For example, BSE 500 is an indice where the basket of stocks represent the top 500 companies in India as per their valuation. These multiple indices help individuals like you and me track various segments as well as sectors of the market in a more individual manner. One unique index that we must mention here is the BSE GreenX. The GreenX is India's first live carbon efficient index. This index comprises of those companies that are working actively to being environment friendly and are socially aware of the climate change situation. This index aims to attract investors who are willing to pay a premium on those companies that are actively working towards tackling climate change. Now coming to our last and final topic of this video. How is Sensex calculated? To understand the calculation of Sensex, one must first understand how is market capitalization or valuation of a company or a stock determined in the stock exchange. Market capitalization of a company is determined by multiplying the price of its stock in the market into the number of outstanding shares that the company has issued in the market. After understanding the computation of market capitalization or valuation, it is important to now understand what is free float. Free float is basically the percentage or number of shares of a company that are open to public trading. To understand free float better, let's take the help of an example. Imagine that you run a company and you want to now raise money for it from the stock market. As you are the primary owner of the company, you are holding all of its shares. Let's take the number of shares in your company to be at 1 lakh. To raise money from the stock market, you would have to sell some of these shares to public. You decide that you will now sell 40,000 of these shares to public at 10 rupees each, and thereby you will raise around 4 lakh for your company. Once you have successfully raised money from the stock market, the free float of your company would be at 40%. This is because you have sold 40,000 of the total 1 lakh shares in the company to public in order to raise money. Free float is that component of a company's shares that is available to trade and invest to public. In your case, after the fundraising, 40,000 of your shares would be freely available to trade and invest to public, and hence that would be your free float. To enable computation of Sensex, BSE determines a free float factor across 30 companies that are part of the Sensex by looking at its shareholding patterns. After looking at market capitalization and free float, let us further our computation by looking at free float market capitalization. Free float market capitalization is simply determined by multiplying market capitalization of the 30 companies of the Sensex into the free float factor that is determined by BSE. This leads to our first variable that comes in direct computation of the Sensex, free float market capitalization. The second variable that comes under direct computation of Sensex is base market capitalization, which is simply the market capitalization of Sensex companies in the year 1978-79. This year is currently taken to be as the base year for computation. The third variable in the computation of Sensex is base index value, which is currently taken to be 100. Finally, Sensex is equal to free float market capitalization divided by base market capitalization into base index value.